Let's get across the market open now. Kyle Rodder joining us from capital.com. Kyle, very good morning to you, or good evening your time. You are in London at the moment. Let's begin though in the States, and that non-farm payrolls report on Friday, certainly stronger than expected.
Yeah, and basically across every key metric, it beat expectations. I mean, obviously we had the unemployment rate drop to 4.1%. It was a few decimal points effectively away from being a 4.0% read. 54,000 jobs added to the economy. And what was probably the most important detail was that, we had some upward revisions to previous months' data, which of course has come off several months of downward revisions, which was probably the key concern for market participants that perhaps the labour market assumed to have been strong for such a long period of time wasn't as strong as previously thought. So it's now framing this kind of a jump that we saw in the unemployment rate in July to 4.3% as potentially a growth shock, maybe a statistical quirk. Opens up a bit of a can of worms regarding the inflation outlook from here, what it might mean for monetary policy in the United States. Very rapidly, the market's priced out effectively 20 to 25 basis points worth of cuts before the end of the year. And it will be interesting to see if we continue to see momentum in the rates markets to move towards maybe even sort of grappling with the idea that there mightn't even be, two 25 basis point cuts to come before the end of the year, one in November and December. But overall, I mean, the market's responded to it really, really positively. It kind of betrays effectively what the major thematics in the markets are right now, which is predominant and thematics and risks, which is predominantly a fear about the economic outlook, a deterioration in growth, and subsequently US earnings. Stocks were higher off the basis of this. The US dollar climbed on the basis of this, which goes back to this kind of outperformance trade, I suppose you could say, for the US economy. And it was, overall considered a very strong print. Again, it opens up some interesting questions going into some data this week, but nevertheless, a beat across every metric and a bullish thing for the markets.
Yeah, in fact, we also heard from Chicago Fed President Austin Goolsbee calling it superb. He's saying that, and he also referenced to the fact that that port strike is over in the States as well. So he's seeing some really solid basis there for the US economy.
Yeah, I mean, you can sort of stray obviously in hyperbole or perhaps, risk delivering sort of grand statements that prove, very quickly to be wrong if the data does happen to turn. But if you look at the US economy at the moment, you've got a situation where growth looks like it's going to track again at around 3% or maybe in the high twos based on the Atlanta GDP nowcast. You've got, unemployment, sure, not as low as it was during the sort of, stronger periods during the post-pandemic period, but 4.1% is still historically low, perhaps a far more sustainable level of unemployment for the US economy. And throwing into this as well, we've got inflation still tracking lower, which will be tested this week with the CPI figure, but the forecast is suggesting that we will get a drop in the unemployment rate, in the inflation rate once again. It's almost the most Goldilocks economy you can possibly come by, and it would appear to be the fact that we've got fairly successful monetary policy settings, fairly expansionary fiscal settings, and probably something that's not being spoken about enough, and this probably ties into a little bit what was going on with the dock workers in the United States, is this productivity boom, which seems to allow for the fact that despite there's this really strong growth rate, that jobs are still continuing to be created, that inflation is able to sort of continue to trend lower, and there's expected that this, coming data to reflect last month's inflation in the United States is going to drop once again. So, I mean, superb might not just be the word for this labour market data, it might be the word to describe the US economy at the moment. It's really in that kind of stronger condition.
Also in focus, oil prices. Look, this is really contingent on what we're seeing in the Middle East at the moment. No impact there yet, but there is obviously market concern there will be on output.
Yeah, and we have seen a little bit of upside volatility in oil prices, obviously, as we've observed the attacks in Beirut. There were the attacks last week, or the retaliation, I guess you could say, from Iran against Israel with that missile bombardment, and this anticipation that maybe on the anniversary of October 7, it is the prime time for Israel to retaliate to that attack as well. The question being, of course, is what will that retaliation look like, and will it potentially involve energy infrastructure in Iran? Now, that would be an incredibly significant escalation in the war, because if Israel was to attack some of the infrastructure that has been sort of touted as a possible target, it's difficult to understate how significant that would be for not only uranium production, but certainly global oil output. And it sort of, I think, has led actually some market participants to believe that a lot of the rhetoric we're hearing from Israel about the retaliation here, throw into that too, targeting nuclear facilities, might be a little bit of bluster, because it would escalate it to a point that, one, it might create even greater issues for Israel being more or less a net energy importer, but also two, and that obviously makes it very difficult for them for Israel to fund effectively its war machine as well. But it would take the conflict to a level where Iran would be backed into a corner and maybe more tempted to actually respond in a far more aggressive manner itself. Is very much acting something contrary to Israel's interests. So at the moment we have seen sort of subdued volatility in the oil market, because I think effectively market participants think that Israel is bluffing at the moment. However, there is that risk that they're wrong. We do see an escalation here, and it does affect a productive capacity in the region. So that kind of oil trade is going to continue to be very relevant this week, and especially for the ASX 200 too, which, when you take away the sort of, the brutalities of it all, in fact, it is very, very brutal to say, has probably benefited a little bit from the higher energy prices, and being one of the reasons why we've seen it push to record highs last week. So a very fraught dynamic, again, one that markets seem to be sort of looking through, but nevertheless, one to keep an eye on as well.
Yeah, not a lot to go on locally for economic data. Kyle, anything particularly standing out for you? We do have some commentary coming from the Deputy Governor and Assistant Governors as well. We've got the minutes from the last meeting. Overall, what are you seeing there, and how are you seeing the Aussie economy tracking at this point?
Yeah, I mean, a lot of what we'll be looking at this week, I think, will predominantly be overseas. There's not much, at least certainly to start the week, to go off as far as macroeconomic data to really feed through the rates outlook. Obviously, the RBA minutes will be crucial, because there is that whole discussion to what extent there is the upside risk to interest rates, despite some positive developments in the data recently. But if you're to look at thematics that will be most important to our market this week, you've got US inflation data, macro concern. You've got the big US banks earnings at the back end of this week, which will be highly significant, and really anchor the markets back into some fundamentals, which will also sort of spill through into the ASX 200 as well. And then we've got Chinese markets reopening once again. And one of the reasons why we effectively saw the ASX 200 pull back from its record highs was that we saw just a bit of cooling going on in the materials sector, the miners in particular, that rallied over the last week or so, or going into Golden Week last week, because of this sort of China stimulus trade. So we'll see if that continues to carry through. So we're going to be taking a lot of our cues from some of these global factors: earnings, geopolitics, China, and US inflation. Those will be the things I think that move the ASX 200 this week.